Hi traders, it's Zoran Kresovic here, head of sales at 8cap, and welcome to another trade zone. This week ahead, we'll be looking some USD pairs. Also, a lot going on in terms of the economic data coming out later in the week, so we'll cover that as well. And also, what I would like to do this week is actually, because I didn't get a chance on Wednesday last week, I will actually recap on some of the trades and some of the thinking or analysis that we've done actually for the last week as well, last Monday. But before I do get started, just a couple of things for housekeeping. First one, please, if you can, give me a follow up on Twitter. My profile is just below. It's at ZoranK_8cap. If you would like to find out more information in terms of the data, charts, analysis, I actually tend to basically provide that data on Twitter as well. So please give me a follow up on my Twitter 8cap account as well. The other thing that I want to actually talk to you about, or at least mention to you, which is very, very exciting here, a lot of exciting things happening at 8cap at the moment, is basically the new website launch. So as of this weekend, today is a public holiday in Victoria, in Melbourne in Australia, so I am working from home. But obviously, if you do get a chance, or please don't get surprised, we do have a new 8cap website launched over the weekend. So that's actually gone live as well. It's got wealth of information on there. Basically, it's got tools in terms of obviously trading, if you're looking to do discretionary EA trading, or if you're looking to do manual trading, crypto crusher, forex VPSs, the platforms that we provide as well in terms of the trading view, MetaTrader 4, MetaTrader 5. We've also got a lot of educational content as well. So we've got the 8cap labs, we've got the events and webinars on there as well. We've got the trade zone, which is what we're doing right now on there. Whole heap of analysis as well from myself and a number of analysts here. So if you do get a chance, please actually go to the website as well, play around with it. It's very insightful, it's very modern, it's very visually appealing, get bogged down in a wealth of information on it. The other thing that I would want to talk to you about as well is obviously the week ahead. So how about we actually get cracking? So with regards to the actual client portal, I've got here, obviously, economic acuity, economic calendar. And what I'm doing for this week is obviously picking and choosing the biggest or most important news that are actually coming out. So if we go into filter and we go high impact news and we click on all, let's just see what's going on this week ahead. So obviously, last week was actually quite a busy one, couple of surprises in terms of the interest rate decisions. So Reserve Bank of Australia raised the rates 25 basis points, which obviously pushed Aussie and appreciated against the USD. I'll touch on that in a little while, because that was actually one of the trades or one of the analysis that we did last week. And also the second one was Bank of Canada. So Bank of Canada actually raised 25 basis points as well, which actually surprised the market somewhat. Now, what's happening this week? So Tuesday is actually quite a busy one. It's tomorrow, obviously. We've got the consumer price index coming out of the US. So obviously previously was at 5.5%. Market is forecasting 5.6%. And obviously that's year on year. In terms of month on month, previously 0.4%, and market is factoring in 0.4% as well. So that's actually happening on Tuesday. Now, that decision will be quite important, or CPI data will be super, super important. The reason for that is because later in the week, we've got the Fed interest rate decision. So I believe quite a bit of information that comes out tomorrow night will impact the news on Thursday as well, when the Fed actually sits down and makes a decision in terms of the interest rate decision. Okay, so let's have a look what else is happening for the rest of the week. So as I just mentioned previously, we've got the most important probably decision is the Fed interest rate decision. So previously at 5.25, or that's what it's sitting at the moment, the terminal rate, quite high up, and actually way higher than some some other countries around the globe, including Australia. But the market is actually forecasting 525 again. So basically what that indicates is that market is factoring in the Fed will not raise rates or not raise 25 basis points. However, in saying that, there is a chance 27% that market will surprise, or the Fed will surprise the market, and there will be 25 basis point interest rate rise. Now, nevertheless, it's either tomorrow or Thursday, my apologies, or the following month. But it looks like it will be, we are coming to the end of the rate cycle, and it will be probably the last interest rate rise, at least for the next few months or until the end of the year. Obviously, that's all data dependent in terms of, obviously, inflation, unemployment, labor market, wages, etc. And also this week as well, we've got the European Central Bank as well. So market already factored in basically another 25 basis points for the European Central Bank as well. So that's in regards to Euro. But how about we actually go into the charts? And let's review last week's. So what we discussed last week, obviously, this is the chart of US dollar versus index. I always absolutely love to look at this first thing first, because this gives me a bit of an overview in terms of the US dollar strength or weakness versus the rest of the major currency pairs, and how it's behaving. So last week we mentioned there is a long-term downtrend line from around September 2022, and I was also expecting potentially to find a bit of resistance that downtrend line, and if we were to see a pullback potentially for the US dollar to come back to that major support level at $100 mark. Now, it looks like actually it is providing a bit of resistance as well, as we mentioned previously, and also given the fact that RBA lifted 25 basis points last week, and also Canadian dollar strengthened as well with the 25 basis points. Obviously, that would have, add some weakness into the US dollar on a reverse. So that seems to be happening at the moment, and it looks like that level of $100 could provide that major support level. Obviously, this will be data dependent, and everything will be taken on day-to-day basis, because at the end of the day tomorrow, we've got the CPI data, as mentioned previously, consumer price index, and if month on month and year on year, CPI data is strengthening, which means that inflation is obviously still sticky and high and way above the rate of between 2% and 3%, which is obviously where the Fed would like to actually take the inflation to. Then US dollar strength might come in, and buyers might come in and basically push and challenge that resistance level. And we mentioned previously, if we do get quite a bit of strength into the US dollar, then obviously it's likely to provide the next level will be that resistance level around 105 mark, and then potentially if it pushes through, it will be around the $108. So that's the playbook as of last week. So you always have to have two scenarios in play, obviously the upside, the downside, risk and money management, to make sure that you're properly covered up in your positions when you're trading, and there is no surprises to the market. So let's push on to the next pair that we covered last week as well, Aussie USD. And let's have a look how Aussie USD actually played out last week as well. So obviously a bit of a surprise as well to some extent. Majority of market participants, or around 62% of economists actually on market also anticipated no interest rate rise for the Reserve Bank of Australia. Obviously, that wasn't the case. 25 basis points came into play. And as you can see, as we've discussed last week, Aussie has been appreciating for 7 or 8 days consistently. I did mention last week that this level here, around 65 level dollar mark, and the demand zone that I have here in blue is going to be pivotal in terms of the support, because the prior level of 66 cents wasn't actually holding. The pair broke that, and the demand came into play here. Now with the rate rise, Aussie appreciated strongly, rebounded, went above that level, broke through it significantly, and broke through the long-term downtrend line as well from February, or I should say medium-term downtrend line. I did mention last week as well, if the pair was actually to continue the surge and continue the upside run, it is highly likely that we will see that next level of resistance, which was actually a long-term resistance, come into play, and basically the pair would actually test it. So 68 level dollar mark actually proves to be quite a bit of resistance, and it's also a 50% retracement level. So that's actually quite important to note. So there is a bit of a resistance band and there is a bit of a cluster around these levels. So as we can see, Aussie is appreciating that. It broke through 50 100-day EMA, exponential moving average, and it's actually marching towards that 200-day EMA. So if you can break that red level or red zone, then you will likely hit the resistance level mark, and then obviously it will be quite dependent for the later in the week. Depends what we see with the USD. Any USD weakness, we could actually have Aussie appreciate even more. On the reversal, I would actually expect Aussie maybe to pull back a little bit more, and basically range within this side range between 66 and $68 mark. That's pretty much a band, or that's actually a comfortable level for Aussie at the moment, because in Australia here, we are highly likely to see another interest rate rise. So it's actually likely to be in July or August. So if it doesn't happen in July, it's most likely in August, but there is a good chance. And again, when we get more data in terms of the wages, labor, CPI, GDP, that next decision will be made. And, we could potentially see Aussie appreciate even more if we get the interest rate rise in July. So that's pretty much the recap. I've also touched on gold last week. I think gold is going to consolidate around these levels as well. But again, it's a healthy pullback on gold, which is what I mentioned previously. We are predominantly bullish on gold, medium to long term. Probably not so much in the short term, but definitely in the medium to long term. So that's pretty much in terms of gold. Let's have a look at the next pair that I want to discuss or talk to you about. And before I do, I will bring this chart up, guys, just actually for some educational purposes. So this is the VIX. This is the volatility index. So for those of you that are actually not using this, volatility index measures the actual volatility within the financial market. So obviously, the higher it is, the more prone we are actually to likely receive a lot of volatility in the market. Okay, now as you can see here, volatility has been actually coming up quite significantly. And as you can see earlier in the year, during the March period when we had a banking crisis, in Europe with the Credit Suisse and a number of regional banks in the US, we saw volatility pick up. A lot of people like to trade volatility, and with some solid risk and money management rules, you can actually take full advantage of the massive swings on the upside or on the downside as well, or if you're a range trader. However, the volatility is actually completely faded over the last few months. So if you actually have a look at it from the March highs, $17 level was actually a key support level for the volatility index, basically providing an 18-month support level, and it's broken through. So as we can see here now, it's clear downtrend in play, and it looks like that actually volatility is completely fading off in the market. This could be a number of reasons for this, but one reason for this could be potentially low liquidity in the market. Obviously, we've had the Fed US Fed policy. We've also had market playing out in terms of the actual playbook. But one reason could be as well the debt ceiling. That's probably the biggest talking point here. So the debt ceiling last week, all the liquidity was actually sucked out of the market because obviously there was a lot of indecision in the market, a lot of uncertainty, and we might start seeing that liquidity getting pumped into the market as the US debt ceiling is actually being lifted, which means obviously Fed will actually print more money, and as a result, more liquid cash or liquid money will go into the market. So that could come into the FX market, that could come into the commodities market, that could come into the equities, or perhaps it could come into the bond market as well. Okay, so just actually a bit of a talking point. I know a lot of people don't talk about it, but this is an important chart that I always also take into account when I'm actually trading, depending on my strategy, because I like to actually get a feel, what is the market feeling out there and what is the actual liquidity that's within the market itself. So last chart that I want to actually discuss today is the Euro USD. My apologies. So I'll actually take all this at the moment, because what I want to do is start from scratch. So Euro, and just before I do go any further, let me just oh, my apologies. I don't believe I've actually switched the screen, so I do apologize about that. I just actually got notified, so I'm really, really sorry about that. But let's actually talk about Euro USD. At least it's a good point now that I've actually switched the screens, because it is important. So what I want to talk about today is the actual Euro USD. And that's actually my talking point today. So Euro has been actually overall trending upwards against the USD, but obviously gaining some fair bit of, I would say, weakness over the last few weeks. And European Central Bank is actually meeting up this week, and they actually tend to conclude a decision that they will be definitely lifting 25 basis points, because the terminal rate in Europe at the moment is actually way below the likes of Fed, which is sitting at 5.25%, but the euro is actually sitting around the 350. So that's actually a significant difference. So euro looks like it's actually already factored in that 25 basis points. But another point to raise as well is that euro has been weakening on the fears of recession. So Europe is actually being really, really challenged with the commodity prices and natural gas, and all the tensions and the war going on over the last 18 months or so between Russia and Ukraine. So it looks like the collateral damage is also done in Europe, and there is actually a lot of challenges that are going on. Now, whilst obviously on the weakness of USD over the past few months, prior to last few weeks, euro appreciated quite a bit. It looks like it is actually consolidating around these levels right now. So let's actually put the levels of resistance and levels of support. So 107 level is actually a major resistance level on euro, and as you can see that it's actually provided that on a couple of occasions now. And obviously the next support level for euro would be around 105 level mark. So that's actually a first stop or first level of support if euro was actually to drop further downwards. Now the next level could be around these levels, around 99 or probably $1 mark as well, because euro has actually gone below parity late last year. But if you have a look at the band in here, we can also see that 50-day EMA, 100-day EMA, and 200-day EMA is actually hovering around the levels where euro is at the moment. From its peaks around 107 level mark, euro has actually retraced quite significantly. So if you do apply Fibonacci levels here, and we go from the most recent major low, and we apply the Fibonacci to the upside, basically what it tells us is that euro is actually breaking through 61.8%. Now, if you refer to the Fibonacci specifically, what that indicates is that because it's broken through percent level, it's likely that we will get more weakness in euro. So what it says is that obviously sellers are in full control at the moment, and it's likely that we could see a little bit more downside. So what would be the next level? Well, it's the level of natural support, which is around 105 level mark. Also, what I want to do is actually apply the Fibonacci from the major low in September 2022. And I would like to actually apply that to the actual most recent high. And what we can see as well there is that 23.6% of the major range is also clustering with 61.8%. So we might find a bit of support around these levels. Also, to add on that, we've also got the supply and demand zones, and it looks like there is actually a bit of a demand here, which means buyers are coming in and potentially buying at the discounted price if they do believe that euro will actually continue to appreciate. So if a trader was actually to take a position long at these levels, we need to look at the upside and see what is the risk versus the reward or win-loss ratio, or how much is the upside in terms of the risk for the downside to get stopped out. So what I will do is actually apply this tool here and look at the percentage levels. So if a trader was to enter this trade long and this was to accelerate and go towards the resistance level, we are looking potentially 2.38% upside. Now, if a trader was actually going short and this was the stop out level, or the support level was the stop out level, then it would be around 1.37% downside. So obviously the upside seems to be around 70-80% more if a trader was actually going long here, with a scope that the pair would hit that resistance level. Again, if you provide, adding the support level or adding the stop out level, and you're not going below the major low, you're going towards the support level, then you would be looking at approximately 1.37%. So that's the risk versus the reward ratio. Now, euro, if we apply the trend line, and I'm a huge fan of trend lines as well, we can see a trend line here that's been actually hit on multiple occasions here when the euro was actually below parity. And when it actually bounced back up, went all the way up around the 105 level mark. Now, what's interesting to see is that at the moment, euro is actually hitting that support level or brushing of the support level or uptrend line. So that uptrend line is providing support at these levels. And again, one more step or one more tool that you can use actually in your favor to actually fine tune the rules around how you actually trade this. I don't believe personally that with lifting interest rates or European central bank later in the week, we will get too much upside in euro. However, in saying that, it will be more important to actually see what are the comments that come out afterwards. If ECB president comes out and says there is a scope for further interest rate rises over the coming months, then it's likely that it will actually be a bullish playbook for euro in itself. On the contrary, it will be also important to see what the Fed says, because any strength in USD is likely to actually depreciate euro as well. So that's something to consider as well. RSI, 14-day SMA RSI is actually around the 50 level mark. So it's actually not saying it's overbought, it's not saying oversold. If you have a look at the 50 and 100-day EMA, it's actually breaking through that at the moment, and it's hovering around the 200-day EMA at the moment. Exponential moving average, break above that, where we could see a bit of upside. However, we might likely to see that sideways move ranging between that 1010 level and also 105 level as well. But again, everything is data dependent. Very important to watch the news again tomorrow and later in the week, because it's not even the decision making or the data comes out. It's more about the story around that. It's more about Jerome Powell, the Fed chair, saying, or providing the market with certainty or uncertainty where we will be heading over the coming months or until the end of the year. The same applies for the European Central Bank as well. So look, I stuck out to euro this week. Let's monitor on Wednesday and see where we are, how the trade is going, or how the market is unfolding, and we'll go from there. But I would like to thank you for your time. As I said, please hit a like button on YouTube if you're liking it. Add a comment as well if you would like to see something else or any particular pair that you want me to look at over the next few weeks. Otherwise, I wish you a happy trading and enjoy the rest of your day and enjoy the rest of the trading week as well. Thank you.